In this video, I am going to explain what is a candlestick and how to distinguish a bullish candle from a bearish candle. Now, a bullish candle is a candle that closes higher than the opening price, and a bearish candle is a candle that closes below the opening price. So, in this example of the CAD yen, you see this candle here. It opened right here. It opened right here and it closed up here, and so it closed higher than where it opened. So this is a bullish candle. And this red candle here is a bearish candle because it opened here and then it closed lower, so it became a red candle. Now in this charting platform, I have a setting where I can make my candles red or green, and then some are black, but the ones that are red are engulfing, which I will explain in a different video. But that is the essence of this concept, is that whenever price opens higher than where it closes, or it closes where higher than where it opens, then that's a bullish candle. So we see this is a bullish candle because it opened here and then it closed up here, so it closed higher. And these wicks, this is where it tells you during this trading day, it went up as high as 81, but at the end of the day it closed back down to 80. So the wicks shows you the highest price point where it reached during that day. So the lowest point it reached is 79.17, and the highest it reached is 81, and it opened at 79.211 and it closed at 80. So that's what that's essentially what a candlestick is. Now you hear people talk about price action and what is price action, and they are price action traders and stuff. Price action is the analysis of price movement alone in an attempt to make order of the market. So this could be, you could see this through candle bars as well as the price patterns. So you can see that price came here, dropped, and then rallied, and then dropped again. But as it was dropping, it had this wick showing that this is not a bearish pin bar, but still it gives us the insight of what price is doing. It reached up here, and there's a bunch of buyers buying up here, but then sellers are stepping up to sell. So it formed this long bearish wick, and then eventually price moved to the downside. Same with here, there's a long wick. That means that the sellers are taking control and the buyers are exhausted. So price went up here, and then all the sellers pushed it down, and that's why it formed this wick, and then it finally dropped down. So whenever you see these wicks, I mean, I'm not saying that every time there's a wick that this long tail means that it's gonna go down. You have to use other concepts in supply and demand to give you tradable pairs to trade. But I'm just saying that whenever these long tails are forming, that's what price action is. When you see that there's a lot of sellers stepping up, you generally see these wicks, and then price move down. With the bullish pin bar, you see that whenever you see these long wicks in the bottom of the candle, buyers are stepping up. So buyers stepped up here and then stepped up there. stepped up here, and so on. So this would be a bullish pin bar. So price moved up, moved down, but eventually closed here, and so this is the indecision candle, but still, you know, price dropped, and then buyers are stepping up right here. They were undecided, and then eventually buyers came in and bought it out. But these bullish pin bars indicate that there's bullish buyers in the market, and the momentum is changing. And these bearish and bullish pin bars and wicks are important to know, because that will help us in identifying when price action is changing and when the momentum is changing.